Let's talk business. Markets closed at over 1 week low after declining for second consecutive day. Metals and energy sectors declined, whereas auto and consumer durables advanced. Alex Matthew with a wrap of all the market action.
Indian equity markets lost ground today, with the benchmark Nifty 50 losing about 0.33%. But the benchmark ended at above 19,600, which is about 100 points off the low point of the day. All told, the Indian equity markets have outperformed global peers. Overnight, you saw the US markets lose ground, and you saw most of the Asian markets as well lose quite a bit of ground today. And that's because the geopolitical tensions in the West Asia region continue to dominate sentiment. And there are fears, in fact, that the Israel-Hamas conflict will extend to other geographies as well. Now, looking specifically at what happened here in India, you had a market breadth that favored the declines, but still the broader markets outperformed the benchmark indices, and you had the small cap index, the small cap 250 index, in fact, that ended in the green just about, with gains of about 0.1%. Individual names stood out in an otherwise listless session. Looking very quickly at the top movers on the Nifty 50, you had the likes of Bajaj Auto, LTIMindtree, Hero MotoCorp, Nestle and Ultratech Cement gaining among the top gainers. There were more losers than gainers on the Nifty 50 as well, with Wipro, Tech Mahindra, Sun Pharma, Hindalco and NTPC leading the declines. Now, I'll speak about some of these names. LTIMindtree gained about 6%, was the outperformer among the IT pack, and that's because it retained its revenue growth guidance for the current financial year at 13 to 16% in constant currency terms. Bajaj Auto was arguably the stock of the day, gaining close to 7% on account of a new dividend distribution policy that could see the dividend for the current financial year rise as much as 4 times. It also had a 200 basis point or more than 200 basis point expansion in the margin number for the second quarter. Ultratech Cement gained over 2% after a 69% rise in net profit. Mastech fell about 8% or over 8% on account of its Q2 PAT. And finally, Nestle India was another stock that gained close to 4%, and that's because of a stock split that was announced, 10 shares for every 1 share held. So all told, it was a bit of a listless session with some bright names shining.
With the geopolitical tensions on the rise, will inflation continue to see an uptick? Will central banks remain hawkish? How will these factors impact Indian equities? BQ Prime spoke to Vinod Karki of ICICI Securities to understand where the pockets of value will emerge.
Equity thesis earlier was for India, it was getting into 2 scenarios. Two factors rather, that globally interest rates will fall, but India capex, real estate, discretionary consumption profit cycle will continue. That was the thing. I think out of that equation, only one thing is gone off, that rates will not go down now. But there is, if I look at any evidence about the capex, the real estate cycle and the discretionary consumption side of the economy, all these cyclical sectors are actually getting better and better as we see more and more data. Getting more and more confident on the overall capex cycle, the real estate cycle, the profit cycle, so that's continuing. So I think what happens is the extra you would have got from rate decline in the developed markets. I think that's gone off. So which means that PE expansion will not happen for sure.
FMCG majors reported quarter 2 earnings today. HUL's second quarter profit remained flat, in line with estimates, and volume growth slowing down. Rural recovery is likely to remain gradual. Competitive intensity will remain high. On the other hand, Nestle India's third quarter profit rose, beating estimates. Sales grew, aided by strong demand for its chocolates to coffee. While the IT company saw muted growth in the second quarter, Coforge and LTIMindtree are optimistic of growth in H2. BQ Prime spoke to the management to understand why they are confident of growth amid worrying global macroeconomic conditions.
we're crystal clear. The macros are unlikely to improve for the second half of the current fiscal. We are equally clear that irrespective of what happens to the macros, we will deliver on the revenue guidance we've given and the margin guidance we've given. And I want to be crystal clear on both those things. Going into next year, and not just next year, we've always talked about the fact that this wasn't just a $1 billion journey for the leadership or the team. It's going to be a $2 billion and then a $5 billion journey for us. We are doing everything that we can. If you look at our SG&A, even in a year like this, the SG&A continues to go up because we are setting the base with those investments now, new people coming in, new investments being made in platforms like Quasar, which is our new Gen AI based platform, to make sure that next year again, and hopefully the years that follow, will again be a robust growth year. The idea is, shouldn't be a 1 quarter, 2 quarter, 1 year, 2 year growth story. We have now built a 6-year story of sustained CAGR growth of about 18% for 6 years. Going forward, the next 6 years and beyond, we would like to show sustained, robust and profitable growth.
Where is that optimism coming from for a relatively more robust guidance?
Yeah, thank you, Tamanna, and it's good to speak to you this morning. In terms of our what we've informed investors on the calls as yesterday was that our H2 will be stronger than H1, and the reason we believe in that we're confident about that is the order inflow that we've had over the last 2 quarters. So we had $1.4 billion of order inflow in Q1 and followed by $1.3 billion in Q2. $1.4 billion in Q1 included a large renewal contract, whereas the Q2 revenues are order book are mostly from new deals that we've won. So the combination of those two, the order inflow that we've had in H1, as well as the nature of the order inflow, makes us confident that we will continue to grow in Q3 and Q4, and therefore our H2 will be better than our H1.
And Titagar Rail Systems reports a healthy set of numbers in the second quarter. Profit and revenue sees an uptick. BQ Prime spoke to Umesh Chaudhary about the company's future growth plans.
So as far as the wheel JV is concerned, it is quite well on track. We should be able to get production within the schedule, or maybe a few weeks or months ahead of schedule. In terms of the other big focus that we have is now backward integrate ourselves. So we are looking at opportunities to do more and more components that we use for our own train production. And that is something that will be not something that can be done overnight, but it'll take a little while. So we are in the stage of planning that, discussion with different stakeholders and potential technology providers. So a lots happening in the space. So basically the whole idea, the whole strategy is that we are in the center of the railway systems. That's how we have rechristened ourselves. And we want to orbit around that space, both in terms of forward integration for the services like we are doing for the Vande Bharat, and backward integrate in terms of components. So capturing the value in this space is what our focus is going to be.
And Google has marked its India flagship event with announcements ranging from financial fraud protection systems to generative artificial intelligence features. The company plans to manufacture Pixel 8 in India. Moreover, Google Pay will begin lending operations in India in partnership with regulated lenders. Rishabh Bhatnagar with the top key takeaways.
We're here at the Google for India event here in New Delhi. This is Google's flagship event meant for users and developers as well. The headline announcement obviously was the fact that Pixel 8 will now be manufactured in India. This is Google's latest phone, and Google intends to put these out, manufacture these in India with domestic and international partners, and the first phones from this range will be out in the market in 2024. That was obviously the headline announcement, but the other buzzword that the Google for India event saw a lot was generative AI. Now, corresponding to that, there was a lot of initiatives that Google put out for businesses as well to integrate generative AI into their famous Google search. a bit on that is that there's two products. There's the business messages product and the Google Merchant Center Next. Both of them enable users to converse with businesses at the search stage of the product itself. Apart from that, there was another interesting tie-up between Google Cloud and ONDC. Now, in this partnership, what will happen is that ONDC will now collaborate with FPOs, which are farmers, producers organizations, to put their catalogs on Google. So now they can also act as SMBs, and with the help of generative AI, they can generate catalogs that a lot of these users and businesses can buy directly from farmers. Another very interesting area of focus was financial fraud. Both Google Pay and Google Play both will now be enabled with real-time code level scanning. So that would mean that Google is now doing a lot more to protect people from financial frauds, such as, there's a lot of scamsters that are roaming around on Google Pay apps. Another interesting bit was that Google Pay will also roll out 5 credit initiatives, the details of which are there'll be a credit line that will be enabled on RuPay as well as UPI. This will be done in partnership with HDFC Bank and ICICI Bank. Personal loans will now be enabled on Google Pay itself with Axis Bank and DMI Finance. On the merchant side, business loans via DMI Finance and ICICI Bank and Indify are to be launched. Sachet loans are also being introduced to Google Pay now. These are loans that will start from as low as 15,000 rupees. This will be done in partnership with DMI Finance. Another merchant credit line will also now be unveiled in partnership with another startup called ePay Later. So these were some of the interesting takeaways that we had from the Google for India event here.
Well, that's all we have for you from the world of business. Time for a short break.